Hey guys, this is Tom Nickley, and today I wanted to answer one of the questions that we are getting all the time, and that is what the heck is going on in the Orlando real estate market? It's something we get all the time, and rightfully so. To say that the last year and a half in real estate has been a roller coaster, to say the last couple years has been a roller coaster would be an understatement. A couple weeks ago, interest rates were sitting right at 6%. It seemed like they had mellowed out. There wasn't a lot of fluctuation. And at that moment, it really seemed like spring had sprung early. Everything about the real estate market seemed like it was popping. There was more new buyer inquiries coming in. The number of mortgage applications increased dramatically. We started seeing multiple offers on our listings out of nowhere. We started seeing packed open houses, and things were really chugging along. But just like has been the case for the last year or so, interest rates will be the name of the game this year, and they will dictate the speed and the health of the market. Over the last couple weeks, interest rates went from 6% to over 7%, and they've continued that volatility up and down. The good news is, even though the interest rates have gone up pretty dramatically over the course of the last month, we have seen that buyer demand has stayed really steady. We're still seeing a good amount of buyer activity. One of the things that we're really seeing a lot in the market now is there's a lot more houses coming off of the market than new listings come on the market. Over a 7-day period, over the course of the last couple months, we've seen an average of about 1,200 to 1,300 new listings hit the market. And during that same time period, there's been an average of 1,700 houses going pending or coming off the market. So that's showing that buyer demand is still outweighing the number of new listings hitting the market. And this is great news for sellers. This is great news for sellers because they're still kind of puts them in the driver's seat. We still have a supply and demand dynamic going on, which is allowing sellers to cash out for top dollar on their home. The one great thing that we've seen over the course of the last year is that property values have stayed very resilient. And while they're not going up at the breakneck pace that they had been going up for a couple years, they are staying very steady. They're going up very slightly, which is really great news for sellers. So the great news for sellers is it's still coming into the spring season. We're still dealing with a lot of buyer demand that's staying very resilient. Mortgage applications are still staying strong. The interest rates and the influx of interest rates don't seem to be affecting the market as much as they were last year. I think what's happened is with interest rates going up at such a drastic pace, it pushed a lot of people, it priced a lot of people out of the market. But I think the people that are still in the market are serious buyers. They're people that have a reason to move. They have a motivation to move, and they're staying very resilient in spite of the interest rates going up and down. So good news for sellers is that it's still a pretty strong market. For buyers, there is a lot of great news. While there is a lot of buyer demand out there, we are finding that we're getting a lot of really great deals for buyers. So interest rates are higher, so obviously buyers are affected by that. But what we are seeing is we're finding that our agents are able to negotiate really great deals for buyers. We're finding a lot of deals that are being negotiated below asking price. We're finding a lot of deals. I'd probably say 50 to 60% of the homes that we're getting under contract, we're getting seller closing cost contributions. We're getting contributions toward rate buy downs, which give our buyers the opportunity to lock in lower rates for the first 2 or 3 years of the deal. So while interest rates are higher, we're finding that there's a lot of other good that's coming out of this for buyers. So while 2023 there's still a lot left to the imagination, I do think overall it's going to be a really healthy market. It's going to be a balanced market. We are going to be dealing with this influx with interest rates until the Fed gets inflation completely under control. But we're thinking that's going to last the first 3 quarters. By the 4th quarter, we should see interest rates going down. But I think in the meantime, it's still a great time to buy and sell. If you have a motivation to buy or sell, there are great deals to be had on both sides. So if you're thinking about buying or selling, if you have any questions, any further questions or any deeper questions about the real estate market in general, please reach out to us, shoot us a message, reach out to us on social media, send us an email. We'd be happy to answer any questions and help in any way possible. And in the meantime, have a great day, and we'll see you guys in the future.